Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, December 12, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We had what's called a down day in the trading parlance, but here's the thing. This morning, I called the title of the email sent to all members was Law of Alternation. Here is the email, and you can see here on top, this was the headline, Law of Alternation, one more pullback before Christmas. We had an up day on the CPI data shuffle. We had a down day on the PPI data shuffle. We talk about this all the time. We've talked about the Law of Alternation before. 600.17 is the most recent breakout area. 600 is a big fat round number. And the 20-period moving average, which is the red sloping trend line, is just underneath. That area, give or take, is garden variety of chart support. Now, in the ideal world, and they never leave us necessarily with the ideal situation, but in the ideal world, if the market came down without having that up day in the middle on the CPI phony data release, then she would have had more opportunity to bounce in and around that zone. The fact that she came in, bounced away, and is coming back down, it not necessarily is exactly the same trade, but she's still far enough away where that area is, in fact, garden variety of chart support. We're going to do a little intermission real quick, but I think you'll appreciate this one. Just going to flip over to an hourly chart real quick. Then I'm going to show you the Automagical Calculator, aka Magic Calculator. Pivot high, 609.07. And what you'll notice is the pivot high over here is exactly 609.07. So what I've done is I've taken the recent pivot high, and we're going to just take the recent number that comes in the support line, the numbers in the sequence. The first one is 602.79. You'll notice where 602.79 comes out, it was basically yesterday's low, give or take. Yesterday's closing print is 602.87. 602.79 was out of the Magic Calculator, and just taking that number by itself with nothing else, the market bounced the next day, which was the CPI phony data release. The calculator is going live at the latest tomorrow for folks that are in the MSF Masterclass. It's pretty incredible stuff. It will be offered as a standalone product. I'm still unsure of how to charge for it. How do you put a price on that? You tell me. Let me see your comments under the video. What do you think it's worth now that you've seen it a number of times? What's it worth to have this each and every month? Let's get back to the daily chart. And is there anything else that we need to discuss? Is there material change from what was already discussed? And the answer is no. What happens if they get below the 20-period moving average? Inside the number, members will have those numbers at their disposal in the morning. Speaking of the morning, inside the number live room members will have Jordan as the moderator on Friday. Inside the number commentary will be closed tomorrow on Friday, but the numbers will be, as they say in the trading parlance, Friday fresh. Let's check out the commentary for Inside the Numbers today. We had yesterday the pop on the CPI numbers. We'll see if today is comprised of the Law of Alternation and we get a drop day. So I'm on this first thing in the morning. In preparation, we have the numbers and they start with today's pivot at 606.55. Let's see how that did. Right of the vertical is today's activity. 606.55 is in fact the pivot, was in fact the pivot. And as you can see, she opened right on top of it and immediately fell away to start the morning session. That's called in the trading parlance, at least in my live room, it's called an early morning shakeout operation. Below on candle closes and the bears have an opportunity to push price lower toward the entrance to no man's land beginning at 605.55. 50. If they're down there in the name of selling pressure, we'll be here to post additional necessary numbers in real time as and if needed. The flip side situation is blah, blah, blah. We didn't need that right now. 605.50. How you doing? Anybody take that trade? Anybody in the live room watching? Did you take this trade? Did we all take this together? Yes, we did. And this wasn't the first trade of the day in the live room. This was actually trade number 3 in the live room. And this turned out to be the Whopper Jr. Pause the video, read the notes, go back to the charts and double check the work. As you'll see, and this is already at 8:45, long before the market opens, 605.95 is the gateway to the entrance to no man's land that begins at 605.50. They're close together, but it's the gateway, 605.95. That was scalp trade number 1 in the live room. Scalp trade number 2 was the spike the low and rip it back up in the other direction. And number 3 was at the entrance to no man's land, 605.50. This was exactly right out of one of the modules that was taught in the MSF Masterclass. 605.50. Ripped it back up in the other direction. Nice trade. A lot of participation in the live room. A lot of participation from an inside the number perspective. Help a brother out. If you participated in trades like this today, help other people out. Is this a place where you can learn how these markets work, how you can profit from the market? Is My Strategic Forecast one of those places? Is David Frost one of those analysts that can help you to help yourself? Post a comment under the video. Help a brother out. I'm not the brother. Other people that are looking for help are the brothers and sisters. Now, here's the other thing that's important to realize. Even before I let you see the rest of the notes for the day, it doesn't even make any difference. We know one thing's important about a pivot. What's the pivot? 606.55. It's the green line. Important about the pivot is above she's bullish, below she's not. So as long as she gets back below the pivot, even if you were long, you know where the trade becomes wrong again because she's not above the pivot. Very hard to hold on to a long trade while she's below the pivot. Write that down. Put it on a sticky note in pen. And then pause the video, read the notes. It's all in here. I've given you all the stuff already. Read the notes, go back to the chart, and double check the work. The other thing that you'll see in here is and lower stuff is 604.65. This is part of the afternoon schematic. And while it really didn't produce a trading opportunity, you can see that they did target that into the end of the day and close below, which opens the door for the next number down in the sequence. What they did was 8 time off the clock above that number for a little part of the afternoon, in the late afternoon part of the session, and then dropped them into the end of the day. So this, in fact, was a bearish, flaggish pattern that began to play out in the last couple of candles in the day. Not saying there's a trade there. We're just saying this is what happened. What about stocks on the move? You had Adobe and Ciena today. Ciena took off in the other direction. It wasn't a trade. But Adobe at 482.80, let's take a look at what happened when it reached that number. Oh, my root. It hits the number 482.80, spikes it by pennies. The low is 482.20. That's pennies when you're talking about a $400, $500 stock. And just minutes later, the thing's at a high of 493.90. If those of you that can't do the math real quick, that's around an $11 rip in a matter of minutes. Significantly more than the minimum required base hit. It's basically a 2% rip in minutes. A lot of participation in the live room. What about the list of markets? Don't forget about this. Let's take a look at the IWM today. Just put a couple of numbers on the board. See what happened. Support numbers are 236.77, 235.40, and so on. 236.77. That's a trade. We had traders in the live room that made plenty of money on that trade at that time, nailing the current low. Here were the next two numbers. You see they came up short of the next number here and here, so they rode it. Then it was resistance. They couldn't get back above it once they did break it. And then they went to the third number into the end of the day and bounced off of it, at least from a numbers perspective, showing you that what? Repeat after me. The numbers work. Go check out the other markets. Can you use this information to your advantage if you're involved in the markets on a regular basis? The answer is, you betcha. You take these numbers in conjunction with what I'm teaching in the MSF Masterclass, the magic calculator, and what's yet to come in there, and it's a recipe for success. That's what I'm handing traders. What about Camp IWM from a daily chart perspective, giving up the 20-period moving average, down over 1% today, 1.3% by the end of the day, and closing below the low of this breakup candle. The low here is 235.33, and right below it is a gap at 234.44, and they closed basically right on top of that place by the end of the day, filling that gap, bouncing off of it slightly. Here's where the IWM gets in jeopardy. Start closing daily below that gap, and it opens the door for another leg lower, down 231, 230.50, something in that neighborhood. If the IWM or small caps are down another $3 or so, give or take, do you think the rest of the market is having an up day? And the answer is probably not. From a weekly chart perspective, tested the recent high, spiked it by a little bit, and here you are in the second week, a pullback away from that high. Putting things in perspective, the weekly chart is in no jeopardy of changing trend anytime soon. But if the weekly chart decides to visit its 20-week moving average, you're going to have the daily chart down here teetering on the 50-period moving average. So you can see here, the 20 period is around 222.30 or 223. That's already below the 50-period moving average on the daily chart, and you're working on this gap down here next to or right above the 100-period moving average. Daily chart gets to look ugly at that standpoint, giving up a lot of gains if the weekly chart is going to test home base. We're not saying it will or it won't. We're just being the umpire, calling balls and strikes. We're looking at the pre-game material so that we're prepared for the broadcast. Now, what about the folks down at the transportation department? Check these dudes out. You've got them spiking through and ripping it back up in the other direction from a number that's been on the board for days and days and days, 16,717. They finish flat on the day, down $2.66. That's a rounding error. That's flat-ish. And they hit that number and spiked it. There's a breakup candle low. There's a gap down here. But that number's been on the board for a while, and I felt like they needed to do that number. They did exactly that. Folks down at the transportation department, Buttigieg's crew, at least for another month or so. Anybody remember or know exactly where that price comes from? Check it out. Aha, a breakout area. Market runs up to this spot, gets summarily rejected. We don't care why. Mrs. Market was telling you that spot is uber important. Therefore, when she breaks above it later and she comes back down, that's the first place that she wants to run a test of, is the most recent breakout area. Another item that's taught in detail, this is just a snippet, in detail in the course MSF Master Class. What about the Q people? Anything going on over there? They were down about $3.50 today, 0.6%. Is that a federal case? We're going to make a federal case out of that? No. Why? Because they're still inside of the most recent breakup candle low in the sequence, which happens to be yesterday's candle. And oh, by the way, this was a very narrow ranging inside day. We're not going to make anything out of that. Why? Because they're above all the moving averages. The trend is your friend. The moving averages are trending in the upward direction. Sure, they can come down to run a test closer to the moving averages, but all in all, there's nothing technically wrong with this market, with this chart. We're the umpire calling balls and strikes. Now, the flip side of that is You get below and stay below, close a day below the low of yesterday's low, 424.59. That changes the character of this particular chart. You'll come fill a gap down here, and then all bets are off. Then the next thing shows coming to test the most recent breakout area at 515.58, and all of a sudden this chart doesn't look the same as it does today. So we're just telling you what it looks like now based on the information that we have. What about the XLF? 49.90 is an important place. They can't recapture it. They tried for the last 3 days and they couldn't do it 3 times in a row. It's becoming a problem for the bull case. Next stop, 49.19 is a gap, and if they get below that, they're at the entrance to no man's land. If they get below that, next scene shows they're going to start to knock on the door of the most recent breakout area down around a spike of 48, 47.85, give or take. Well, guess what? The rest of the market isn't very happy. The rest of the bulls aren't very happy if the financials are doing that. If the Qs are doing the thing that we just talked about before, other stuff is getting creamed, all on a relative basis, of course, but they're getting creamed at the same time. That's the way the market works. Creamed is a technical term. What about Smashmouth, the Philadelphia Semiconductor Index? They joined the party on the downside, down about 1% today, $2.38. As long as they stay in this triangle, they can go back and forth. For now, we're going to use this breakdown candle high as a bogey, stay below that, and they're susceptible to fall more. Get above that, and the door starts to open to the top end of this triangular pattern. Below here, they start to break down, and other things happen, like the stuff in the Qs, the stuff in the financials, all that stuff. If that's happening in the Qs and the financials et al., it's likely happening in the Philadelphia semiconductor space and its components as well. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.